Today on Business Edge, we talk trade, but it's not just any trade. It's what's helping to facilitate trade. And that, of course, is happening through e-payment systems here on the continent. What's the future for Africa's e-payment systems? We get into that today. We also get into the fears that another global recession is on the way. Everything is pointing into that direction. But one big question we must ask is, what would it mean for African economies? Those two conversations are front and center right here on Business Edge, where we talk African business, the economy, and finance. I'm Tolulope Adeleru-Balogun. Welcome. Let's get straight into the headlines. Nigeria's crude oil production has continued to slump as the Organization of the Petroleum Exporting Countries' newly released monthly oil market report for September reveals that the country's crude oil output fell to 900,000 barrels per day last month. According to OPEC, Nigeria's crude oil production from the data reported by direct sources dropped from 1 million barrels per day recorded in July to 900 barrels per day in August. We move to North Africa, where Tunisia expects to reach a deal with the International Monetary Fund in the coming weeks on a loan of about $2 to $4 billion spread over 3 years. Tunisia, suffering its worst financial crisis, is seeking to secure an IMF loan to save public finances from collapse. The government and the powerful UGTT union signed a deal to boost public sector wages by 5% last week, a step that could ease social tensions. But they did not announce any further agreement on reforms needed for an IMF bailout. Staying in the region, Egypt's Canal Authority's chairman Osama Rabi said it is increasing fees for ships passing through the Suez Canal by 15% in 2023. Transit fees for bulk and tourist ships will be raised by 10%. The fee increase will be applied starting January 1st, 2023. He also disclosed that the authority aims to list shares of between 10 to 15% of its subsidiary Canal Mooring Company on the local stock market by the end of this year. In East Africa, Kenya is pursuing a new trade deal with the United Arab Emirates to export coconuts and potatoes after a successful pact that saw the first batch of avocados exported to China. In July, the two countries started talks on the United Arab Emirates-Kenya Comprehensive Economic Partnership Agreement to ease and increase trade volumes in goods and services as well as investment. The UAE is now Kenya's second largest source market after China on the back of soaring oil prices, having overtaken India. Data from the Kenya National Bureau of Statistics shows expenditure on imports, largely petroleum products, from the Middle East more than doubled in the first 6 months of the year. The trade pact is expected to be in line with East Africa Community Trade Treaties. And we wrap things up with Kenya, where we hear that Kenyans living abroad sent home 37.4 billion Kenyan shillings, a 2.1% decline compared to the 38.2 billion Kenyan shillings sent in July. This is the fifth consecutive decline in remittances sent amid rising global inflation. A report by World Remits revealed that migrants around the world have had to reduce their spending to be able to send remittances back home as inflation bites. According to the Central Bank of Kenya, Kenyans in the U.S. remain the largest source of remittances in Kenya, accounting for 58% in the period. We'll take a quick time out. When we come back, our first conversation highlighting the challenges, the opportunities, and the future of Africa's electronic payment market. Stick with us. Since the first business transaction took place between humans some 200,000 years ago, how we pay for goods and services has changed drastically. Over the years, the world has moved from making payments via bartering to now using digital currency. This evolution in the payment space came about due to necessity. The bartering system was limited by the availability and divisibility of goods. And what we're seeing now is the revolution and evolution of the e-payment systems. This has been due to the growing spread of internet-based banking and shopping. E-payments have become dominant in the West, leaving traditional cash settlements behind. But how is this system faring in Africa? where much of our day-to-day financial activities are still carried out in cash. E-payments bring solutions for both consumers and businesses, rapidly altering Africa's financial systems. But there are still hurdles to overcome and things to figure out, like regulation, as the continent's e-payments market moves to the next level. A recent McKinsey survey puts all of this in focus. I have Edem Seshie, Associate Partner for McKinsey Lagos, here with me. He's the head of McKinsey's Africa Payments Practice, and we'll get into the future of this market. Edem, welcome to Business Edge. Thank you so much for joining us.
Thank you for having me, Tolulope. It's my pleasure to be here.
Fantastic. So let's start with this. We've seen that e-payments in Africa have been gaining a lot of momentum, particularly since the early 2000s. And we saw that sort of leapfrog and jump forward with the COVID-19 pandemic. So what's been driving this growth of the e-payments market across the continent now?
Thanks, Tolulope. I think like you rightly said, the change has actually been underway for the greater part of the decade and probably longer. And I think payments is fundamentally intrinsic to the economy in general, right? Because we're talking about moving money from one point to the other. So payments is always going where the economy is going, right? It's intrinsic to commerce, it's intrinsic to consumption, right? So for Africa, one of the big underlying currents, or what you would call tailwinds, is just the growth itself, right? The growth in their economy and the favorable demographic shifts. And I think two things in particular to point out there has been that Africa is the fastest urbanizing continent, right? So we talk about the structure of the population and the very youthful continent, but a lot of those youth are also living increasingly in cities, right? And with the shift in urbanization, there is also shifts in consumer behavior and the demand for more convenient, ways of paying for things. You're also seeing on the other side of the transaction, there's always at least two people involved in the transaction that payments facilitates, right? Some consumer that's trying to buy something or a customer, and someone that's selling something that needs to receive the funds, right? On the flip side of all of this urbanization and the very youthful continent is also merchants that are increasingly embracing e-commerce, right? So those two sort of mega trends, right? The increased urbanization and the responses in merchants to the shifting behaviors of consumers. And this isn't only for payments. You see this across transport. People are transporting themselves differently. People consume entertainment differently. So consumer behavior is shifting, and all of that undercurrent is very good for electronic payments, right?
Okay. And I want us to get into that shift in behavior. But before that, one thing about the pandemic is we all note it spurred a number of things, like this remote work, the conversation around the Great Resignation. But do you think what happened in 1 year with Africa's e-payment markets would have happened in that same space, or would have taken maybe another 3 to 4 or 5 years for it to happen aside from the pandemic? Because that growth was really just packed into the things that happened in 2020.
Yeah, I mean, it's a difficult one to say, but what we did say, at least from what the data suggests, is I think first it's important to remember that COVID is, first of all, a humanitarian crisis, right? So not something to necessarily be excited about, right? But all the data suggests, and McKinsey's previous reports also indicated this, that we saw something like the equivalent of half a decade of change in a period of a very few months, right? And this is because a lot of people, a lot of consumers, a lot of businesses embraced electronic payments more as a matter of necessity, right? But that significantly accelerated the pace of adoption, which is really good for electronic payments players, right? To put that in context, our markets have always been growing very fast due to urbanization and all of these things, right? But between 2019 and 2020, if you're looking on the year-on-year figures, in Nigeria, for instance, the market electronic payments was already growing at about more than 90%, almost 100% per annum over a 4 or 5 year period, right? But between 2019 and 2020, those volumes jumped by about 300%. So there's clearly a departure from the normal trend, right? You see a similar thing in Ghana where mobile money dominates. And even though it was growing at an average of about 60% per annum, between 2019 and 2020, that growth doubled to about 120 something percent, right? So across the continent, there's clear evidence that COVID, though unfortunately, did accelerate the adoption of electronic payments, both for consumers and for businesses.
Okay, so you mentioned trends earlier, but let me add some numbers that show us that these trends are paying off. So, according to the Central Bank of Nigeria, mobile money transaction volumes in the country doubled to around 800 million in 2020, while data from South Africa shows that online commerce grew by around 40% during the lockdown in 2020 and 2021. And as you mentioned earlier, Edem, the report does mention shifts in consumer and business behavior. So what are these shifts we're looking at? Let's talk a bit about that, because I find it interesting that it's what's driving the market. You've talked a bit about the urbanization, those demographics. Again, a young population. Africa is the fastest urbanizing continent in the world as well. So these are also shifts in consumer and business behavior, but also trends that are also pushing the growth of this market.
Yeah, I think there's three other things to mention that you can think of as these are the ways that the market is taking advantage of all these demographic dividends, right? One is that intersection of innovation and technology, right? I think in the last couple of years, we've seen tremendous innovation and innovation that is sort of relevant to Africa's specific problems with electronic payments, right? Mobile money is a clear example, but you've also seen products that, especially when COVID hit, for instance, you saw that there was a lot of coupling of things like online stores with your payments acceptance. It got a lot easier for merchants to get online, right? So I think innovation itself has been a great accelerator of this, right? The other thing is the investment in infrastructure, right? We've seen a lot of development in the payment infrastructure in Africa, and you've seen that even cross-border transfers are a lot easier. And this is both driven by investments, like PE investors, but also sort of strategic investors with an increasing interest in the continent, but also national governments and regulators and associations or industry associations have been an important part of this, right? So you look at Kenya's PesaLink or NIP in Nigeria or JIP in Ghana. These are all sort of instant payment rails that are very, very important to the acceleration you're seeing. So that improved infrastructure is making it possible for all of these sort of urbanizing customers and consumers and businesses looking for solutions to actually find them, right? So they're easy to find. So that sort of demand and supply are moving in tandem. I think the other thing that is important in both of these things, right, both enabling the innovation on the actual products and innovation also of the increasing availability of stable and reliable, much faster, lower cost infrastructure is investments, right? Investments in terms of money, but also investments in terms of capabilities and partnerships with global giants that have an increasing interest on the continent, but are not necessarily able to attack it themselves directly, because Africa is a continent of 50-something countries, incredibly complex, right? So those partnerships and investments through local players has also been critical to enabling the market to take advantage of the opportunities.
All right. So, Edem, before we go for a break, I like the fact you sort of ended that answer bringing in some of the players or some of those who are looking to play in the space, because my next question focuses on those who've been in the space traditionally. What we do know is that the domestic e-payment market is expected to see its revenue grow 20% per year, reaching around 40 billion by just 2025. But this money, while it sounds good, also means it's taking a bit from those in the traditional space. It means that there's a challenge to the traditional players in Africa's financial system. So are they responding? How should they even respond if they are looking at what's happening in the e-payment systems market and they're trying to be part of that, or saying, you know what, eventually we know that cash is still reigning. I don't need to think about that right now.
It's a great question. But the good thing is that there is so much growth that it's probably too soon to start thinking of the market in terms of winners and losers, right? Where we are now is actually that, with all of this electronification of payments, we need to bear in mind that more than 90% of transactions are still in cash across the continent, right? So what this really is growth and opportunity that will be available to all the players in the market for a very long time. Take, for instance, cards, right? While a lot of the innovation has enabled greater card acceptance, the bulk of cards are still issued by banks, right? Which means that every time someone uses a card in places that they didn't have an opportunity to use those cards before, that's more money for the banks, right? If you take mobile money, right, a lot of the transactions were actually P2P transfers, right? But now, because of fintechs enabling things like merchant acquisition and the integration of mobile money into checkout options, now you can use like mobile money to pay for Uber or things like that, right? That increases the usefulness of mobile money, but enabled by fintech. So it's really a win-win for everyone. And there's really so much growth that it's a story of opportunity in the future for everyone. It's not a win-loss
situation
scenario.
Okay.
Yeah.
Edem, let's go on a break. When we come back, we look at a bit of the challenges because some of the issues in the market remain the fragmented nature of this particular market as it is across the continent. And there will be some countries that will be leading the way in the e-payment systems market. The conversation will continue right after this. Our first conversation today on Business Edge looks at the future of Africa's electronics payments markets. And my guest is Edem Seshie. He's associate partner at McKinsey & Co. He's also the head of McKinsey's Africa Payments practice. So, Edem, I want us to look at some of the challenges that the e-payments markets may encounter. There's fragmentation. That word is just making me stumble today. There's fragmentation that's coming with different payment types in different countries. There's also the difficulty of handling online transactions in different local currencies, which also complicates the processing of digital payments across the continent. So when you look at these challenges that are still there, these challenges that make it just a little bit difficult for this to be as seamless and as integrated as we'd want it to be, what are the solutions? Are we working our way towards those solutions across the continent?
Yeah, I think we're definitely working our way towards the solutions to address these challenges. And in fact, the opportunity that is in Africa is directly linked to the complexity of the problem, right? If there wasn't a problem to solve, then there isn't really an opportunity, right? I think as payments get digitized and moves to electronic channels go, there is also increased risk, right? Monitoring the transactions, being able to identify who's ultimately behind the transaction. So there is elevated risks, especially around money laundering, fraud, identity theft, and things like that, right? So I think that's a challenge for the entire market. But thankfully, I think it's, players are starting to respond. And if you look at where the shift is going, especially on the fintechs who are traditionally a bit stronger on the product development side of things, you're starting to see that they're building those muscles in compliance, fraud, and risk management, right? But that will continue to be an area of challenge. I think, like you rightly said, the continent is complex. 51 markets is complex, right? With multiple currencies, etc. But we're already moving in the right direction there, and all the innovation you're seeing in infrastructure and instant payments, right, which are integrating, acceptability across all these payments methods, or what's called interoperability, is really great for that. Now we're seeing a lot of that mostly on the national level, and we haven't sort of built this Pan-African rails yet, or at least they're not mature yet. But there you also see great signs of progress. The PAPS, the Pan-African Payments and Settlement Systems, for instance, is a great step in that direction, right? You're already seeing some private players integrating wallets across the continent and making it easier for people to move money across wallets across countries. You're also seeing things like virtual cards, right, where the account of origin may be in a local currency, but the card itself is fungible across continents. And these are all things that have accelerated the e-commerce, for example. But I think the two challenges that will continue to remain, but also our opportunities, are the increased risk that just come with, being able to identify people especially in remote transactions, and the sheer complexity of the continent as you try to localize solutions.
So in terms of that sheer complexity, we know that the development and sort of the progress that comes with the e-payments market is not going to be uniform. So let's look at the countries you think will be bringing in the most revenue, the countries that will be driving the growth of the e-commerce or the e-markets payment system. And I ask that also to say, is regulation keeping up? Because regulation also across the continent tends to be imbalanced, especially when it comes to some of the things happening in the technological and financial tech space as well. So who's going to be driving, who's going to be bringing in the money, and is regulation in some of these countries keeping up with where the economies are headed?
I think if you look at Africa, right, credit is actually due to the entire ecosystem of players for the growth we have seen over the last decade or more, right? And the central banks and regulators have been a key enabler of this. The drive for financial inclusion is probably one of the biggest accelerators of the shift in electronic payments we've seen today. That's what enabled things like mobile money. That's what drove Nigeria's sort of shared agent network infrastructure, which is critical to the increased adoption of things like mobile money, right? So the regulators' push for financial inclusion has really been instrumental in taking payments beyond a few people with bank accounts to a much larger population, including things like tiering of KYC to enable people to be able to perform basic transactions without going through the rigorous requirements for a full-fledged bank account. So the regulator has been an enabler. It's also important to understand that it is still the regulator's job to balance innovation and the speed of innovation, right, with the protection of the consumer and market stability, right? So it's not necessarily an easy balance to strike, but I think from our point of view as McKinsey, that push and acceleration of financial inclusion and all the initiatives that have enabled it, including investments in real-time payments infrastructure, have been core to driving the growth.
All right, Edem, my final question is this. The report says that this is an exciting, complex, and evolving market with tremendous growth prospects, and we can continue to see a new generation of winners emerge and scale. So what lies ahead for Africa's e-payments market? What's the future looking like?
Brilliant. I think I like to think of it in terms of, there's about 80 million merchants in Africa that are waiting to be acquired. And then there is, more than 400 million consumers that are waiting to be enabled. And there is 90% of transactions that are still in cash. So we have barely scratched the surface, right? And what I would love to see happen is that our projections get exceeded. And this 152% projection of growth, when we look at it in 3 years, 4 years, or 5 years, we believe that it's a gross underestimation of the growth. I hope that we can see that in 3 or 5 years. But it's another decade of tremendous opportunity ahead. I encourage you to also take a look at some of the insights shared by my colleagues in the FinTech in Africa report, which says this is the end of the beginning. I think this is really the end of the beginning. The plumbing, the infrastructure works in place. I think now we're going to move to see a lot more products and solutions built on top of that infrastructure. And so to the benefit and to the delight of consumers and merchants. So we wait for that future. Africa's 80 million merchants and 400 plus million consumers should be excited about that future.
All right, Edem, Seshie, thank you so much for your time. We appreciate this conversation, and one I'm very sure we'll come back to sometime in the near future. Do have a good one.
My pleasure. Have a fantastic day.
And although 90% of transactions on the continent are still done in cash, it is still cash, very much king here on the continent, we see that the prospect of Africa going cashless has led to a rush to revolutionize the continent's digital payment landscape. And we're seeing it in the conversations we're having about technology, fintechs, and now, of course, the electronic payment system market and the future of that. What's up next for Business Edge is international business news. We'll give you a few things that are happening outside of the continent. Stick around.